So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is the best way for you to grow your wealth. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best financial independence and passive income wealth advisors in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He has a nice diversified background of real estate ownership, of cryptocurrency, as well as precious metals, and so kind of more of an alternative way of looking at building wealth. In fact, you can find him at crushthestreet.com. He's originally from California and decided to move to the great state of Texas, and I'm excited to welcome Keneth Ameduri to the show. Keneth, how you doing?
Brett, I'm doing well. Thanks for having me on the show. It's a pleasure to be here and talk money and just entrepreneurship, finance, growth. I mean, all these things are just so exciting to me, especially in this world we're living in right now. It's kind of a crazy time, right?
Absolutely. The world's kind of been turned upside down a lot of ways with COVID-19 and kind of a new era here, and we'll see how it all shakes out. Political, tension, a lot of change that's going on. That being said, let's dive straight into a little bit about your story. I'm curious, tell us a little bit about your background and your current focus.
Well, as you said, I moved here to Texas from California, and a lot of it had to do with taxes. It is what it is. I'm not looking to do anything illegal. I always agree to pay my taxes and abide by the law, but legally I'm allowed to live in Texas and pay less taxes. So capital is going to go where it's treated best, right? The weather's not as good though, but it is what it is. But yeah, going back to my story, I mean, I could just think back to the time I was a kid, hearing the stories of my mom, my dad. My mom was from Argentina, actually. She was an immigrant to the U.S., and she is someone that her parents were from Europe. They were living in Italy at the time. Obviously, after World War II, Europe was decimated. I mean, completely just not a great place to live, and a lot of people were moving to a place that, had a good economy, had people going there that spoke the same language, that, similar cultures and whatnot. And Argentina was a popular spot for a lot of Europeans to go, as the economy was great for like a minute, right? You hear all the problems that are going on there now, but at the time it was actually pretty good, And so they kind of ruined that. The government did a lot of capital controls. I mean, they saw hyperinflation. And luckily my mom's parents and her had a store, because what's interesting is that, they weren't necessarily dependent on a fixed paycheck like a lot of people are in inflationary environments. They were actually able to raise prices when the prices went up, or when their currency went down, I should say, which is just an interesting thing. I mean, they really saw it here in the US. We've never really experienced a crazy inflation the way some of these other countries have. But that was really in my mom from, this distrust perspective. My grandfather died with cash underneath his mattress. That's how much he distrusted banks, banking controls, and then devaluing the currency. So anyway, it really instilled this individualism. Don't depend on, the government or just, something else to really take care of you. I mean, obviously love people and have community and whatnot, but I mean, really take initiative in your life and go out and do something. So anyways, that really stirred up entrepreneurship in me. I mean, my father was always planting seeds of just, hey, how could we make our first $1 million? And, don't expect somebody to just go out and make it big, or, working from somebody else to be your ticket to financial freedom. Truly, financial freedom comes from having ownership over your life, and, ownership over your income is a big part of that. So that's what led me to wanting to invest. I mean, my goal has always been, it still is, I love investing in real estate. The idea of paying off a house, and I like the idea of paying off a house and just the cash flow it brings, the peace of mind, not being overly leveraged and whatnot. And I get of that, but just, I cannot think of a safer, more needed thing in this world than real estate and just having that peace of mind. And so everything I do is just like guerrilla warfare to just buy real estate, own precious metals, own some safe stocks, and that was even the business that I started to get into. We cover the economy, we cover finance, we cover stocks, what's going on around the world, what are humans doing, where is capital going to go to be invested in different trends, to be in front of those trends, before they're fully appreciated by the market and effectively priced. So anyways, that's what we do at Crush the Street. We partner with different companies. We try to do them at the right time where we get into them and experience the move higher. And, I'm an investor. That's what I do. That's what I love. And I love like educating people.
Yeah, I love it. Great. What an amazing story. What an amazing heritage. And like so many who came from really tough era of World War II to set that legacy for the family, and then that entrepreneurship, right? And then that I guess that thirst and that appreciation for freedom, right? And the opportunity to do what we've had a chance to do, let's say in our generation, not having to think about a lot of the challenges they had, right? As far as our parents and grandparents, especially. So I love that story. I especially love the part of your dad, like, hey, how are we going to make our first million, right? I've watched a comedian, Sebastian Maniscalco, he's seen him, and he talks about his dad. Like one Saturday, he was like an 8-year-old, right? And he was just watching cartoons Saturday morning, and everything was going pretty good, he thought, and then all of a sudden his dad says, hey, turn off the TV and go start a business. And he's like, what do you mean? He's like, yep, go start a business. And he's like pushing him outside, and he's like, oh, right now? Like, am I supposed to, life's starting right now? And he's like, yeah. And my dad instilled in that in his early age too, of like being like an entrepreneur and taking that individual responsibility. So love that.
I think it's hard. Yeah, no, I was just going to say, it's hard to be an entrepreneur. And some of the things you start to realize, you got to be a salesperson now. It's not just, oh, I'm going to be technical and do something. Like now you got to sell, and now you got to deal with people. I mean, I started my business, in my early 20s, and there were a lot of things about, just interacting with the CEOs at a high level who've been in business for 20 years. They've had a lot of like mental conditioning and like, I guess just negotiating, expertise that I just didn't have at the time. I didn't have a depth of, social interactions, of, meeting people at conferences, and just a lot of the things that you really need to kind of get comfortable with, and presenting yourself and dealing with these situations. I mean, I was just, so much about the investment, but then all of a sudden, there's all this, like, there's this world of knowledge that I'm just not familiar with. And that was struggle. It was a struggle to like get up to par and to feel, okay, I can do this, And so it was part of the growing process of being in business and just getting thrown out there, because I never really had a real job, if you will, if that makes sense. I mean, I had a minimum wage job, and I went into business, investing and, running what I do. So that was part of my struggle. I mean, you're going to ask about that, but that was part of it.
That's beautiful. I know. Thanks for sharing. That's great context. And to that point, I'm curious. You give us a background about the family and such, and the heritage, which is amazing. I think we've all been given certain gifts in this life, and these gifts are used to be able to bless others and part of who we are. So I want you to back up when you were younger, Kenneth, and you said, like, what was that one gift that you were given, like, and how does that help how you help people today. Connect those dots for us.
Yeah. I would say that, I mean, I grew up, as a Christian. I'm still a Christian and whatnot, but, just being in an environment where I was taught to be grateful, taught to, wake up and give my best, taught to do a good job for people. I mean, this was the culture of what I grew up doing. My mom really pushed that in me. And it transcends Christianity. I hope nobody just takes that and writes it off. It's that concept, because there's a lot of people out there doing the opposite. They wake up, they look around them and they're miserable, right? They're victimized. They're feeling like the world is against them. And they're not looking to give. They're looking to say, how can I be taken to where everyone else is, right? There's a lack of abundance in their life, or that they feel, and so they don't want to give. And so I would say that it's just a step-by-step, always trying to go the extra mile that builds upon itself, that compounds upon itself. And then now, my goal is to, give more than I take. Obviously I want to give people the best content, the best research, my best when I present myself education-wise. And so I would say that's the biggest thing. I mean, it's not like an overly technical thing. It's more of a mindset, because that's really where it all starts. It starts in you. And I just am so grateful thinking back, because I didn't know what that would lead to. I didn't know what that foundation would ultimately become. But I look back and I'm like, my goodness, I'm so glad I had that foundation, because it built something so beautiful later on down the road.
Excellent. I love that. That's amazing. So now let's dive into some more of your insights when it comes to cryptocurrency, real estate, and investing in general. Most of our guests are real estate heavy, commercial real estate experts, right? And we have a lot of that. So I'm really interested to kind of connect the two, or bridge the two here. And so walk us through your journey of going into that, that new world. Let's say, it's still kind of a new world. It's kind of a wild west, right? Into the internet, into this thing called cryptocurrency. But talk about that, and talk about your journey with it and your take on just investing in those types of assets.
Yeah. Well, for me, it all was about, looking for an area to invest in. I mean, as long as I'm investing in something ethical, I'm just looking for an opportunity to make money. But what really led me down that rabbit hole was the precious metals, being involved with precious metals, and then see what's going on with the government. I mean, right now we have a situation where, they printed 7 times the amount of money they did in the '08 crisis in response to this illness in a matter of months. And so things are really ramping up in our environment. Money's getting printed into oblivion. It's not really like a tinfoil hat thing anymore. I mean, people really can see that things are problematic in the world. I mean, the government's, running at full bore. I mean, 33% drop in our GDP. I mean, imagine if that was a company, right? That's the US GDP, 33% drop. So, anticipating that, knowing that, we were kind of headed for something like this. I mean, nobody could have predicted the illness, but then in terms of, hey, we're kind of getting to a point where this is all dependent on easy money and debt. It led me down to alternative finite assets, if you will. And that's why I like real estate. It's going to take however many, annual earnings to buy a house, whether that's, $1 million if the minimum wage is, $10,000 an hour, let's say, or, what, I'm just making up numbers right now, but it doesn't matter what the dollar is. That's going to have value. Real estate's going to have that real hour by hour value. And so that led me down to a more speculative investment, an early stage investment. Gold has had 5,000 years for people to attempt to figure the price out. It just hit $2,000, by the way, like 10 minutes ago. But we've had 5,000 years to kind of try to figure out what the price of gold is. Bitcoin has been around for roughly 10 years. It's so early stage, and the world has still yet to really appreciate it. So there's that, in my opinion, an asymmetric return, because I believe there's going to be more buyers than there are sellers when it comes to Bitcoin and something like Ethereum over the longer term. And it's still such an early stage. It's about $250 billion market cap, Bitcoin, while gold is like a $10 trillion market cap. And again, it's that early stage. And, if I can make an analogy, Bitcoin is like seeing a 5-year-old LeBron James. I know it's a little more speculative, but you can see that this child has so much potential. The way he dribbles, the way he interacts with the ball and shoots, and it's just like, but you don't know if it's going to throw a tantrum or not, right? I just think there's a lot of early stage upside in it, as opposed to something like precious metals, which is a little more efficiently priced, with upside when it comes to what's going on in the economy.
Wow, so much wisdom right there, and so much just clarity. Because I mean, the 7 times the amount of money printed in this COVID-19 crisis over '08, right? And we thought '08 was the end all be all, right? Now imagine the amount they've thrown at it. And so where does inflation go? Where does all this, what is all this bubble that they're blowing up, right? I think one thing I'm studying more and more is the crest and the falls of these dips of market cycles, right? And if anyone, I think most would agree, the last few years have been a seller's market. It's been rapid high appreciation. Things are like all-time highs, and now we're kind of maybe at a crest where it's going to take a little bit of time, but then the fall is going to come. That's the thought of for real estate in my real estate mind, and typically these are 7 to 9 year cycles to go up and back. So talk about what you think is coming here in the next 3, 6, 12 months.
It's an interesting thing. We're really in unprecedented territories. We're living in a world where fundamentals don't really match what's going on with valuations. I mean, you could see what happened with Warren Buffett earlier this year, where he missed the bottom of the March lows, right? He was on the sidelines with lots of money, saying everything's too expensive. But, obviously things have recovered in a major way, despite things being overvalued at the March lows. You know what I'm saying? So I think you have to be open, because there's always you can be 100% fundamental or just, I don't know, whatever the other opposite end of the spectrum is. But I think you just have to be open to the idea that they're going to continue to print, and the dollar is not your friend. So owning things like a company which makes money and they can charge higher prices and be around in this environment is probably going to be more expensive in relation to dollars. And I'll give you an interesting stat. Like the M2 money supply has grown since about the 1950s at a 6.7% annualized interest rate, which also tends to correlate with the annual growth of stocks and real estate. So when it comes to, assets growing, there's a large correlation to what's going on with the money supply year after year. And this year we've seen a huge injection of M2 money supply go into the system. And sure enough, what did we see happen with stocks? Real estate became supported in a major way. I thought real estate was going to really collapse, on a fundamental basis. But I also knew that they were throwing trillions of dollars at the system, $1,200 checks, PPP, all these different things. And so the money's got to go somewhere. And so to that degree, it just depends what the government's going to do. I believe they're going to continue throwing money at the system, because what else are they going to do? I have tenants right now in Florida who are, in the process of getting evicted because they're not paying their rent now. We've tried to work with them and whatnot. But, and that's my own personal situation, but I think that's going to happen in a big way here, with so many people unemployed. And I think the government's going to come out and say, hey, we need to do more. We need to do more until ultimately there's a fallout. But even then, the fallout is going to be in the currency, right? And so I think that owning things like real estate, gold and silver, Bitcoin, and even good stocks is going to be a hedge against the problems that are going on with the currency and the inflating currency that we have.
Let's talk about diversification here in a minute, but I want to remind everybody we're speaking with Keneth Ameduri, and he is with crushthestreet.com. That's crushthestreet.com. So with that being said, Keneth, talk about the importance of diversification in a market like this, as well as liquidity and not having too much debt or being debt free. What of those three, walk us through why that's so important right now, that more than ever.
Yeah. Well, I mean, diversifying is your friend against not losing money. One of the most frustrating things was watching the 2011 to 20, I'll call it really the 2018 market in precious metals, where, man, look at all this craziness going on, and gold just kept floundering, despite the fundamentals that, we've been looking at. Now we're starting to see things play out. But despite how certain you are about what the analysis should be, you have to be open to being wrong. And that's the importance of diversification. Even though I had certain ideas of how I expected things to play out, I didn't invest 100% in one way or another because I'm open to the idea of being wrong. If I knew 100% something was going to go a certain way, why diversify? Right? What's the point? Just invest in what you think is going up 100% and do that. So the idea of being wrong and being exposed to different areas and changes in the environment is extremely important, especially as we live in an age where things are changing so fast, right? I mean, the FANG stocks, on paper, were extremely overvalued in 2019, representing large portions of the S&P 500, obviously the NASDAQ. But my goodness, going into COVID, the illness here, they got even bigger while the rest of the economy shrunk. People are on Facebook more, Netflix, Amazon. It just, again, things that you may not have anticipated. You're like, hey, these are way overvalued, but all of a sudden they get even more overvalued in a way, going up even more, with something you can't really anticipate. So you have to be open to being wrong. And I think that's the importance of diversification.
Yeah, I think it comes down to part of it's humility, right? And part of it's not having too much pride. And the part of it's just common sense. We don't throw all the eggs in one basket. We want to have diversification. That being said, I want to touch on this. So what we do at Capital Gains Tax Solutions is provide a tax deferral strategy called the Deferred Sales Trust, where people can sell highly appreciated assets. And then the beauty of it is diversify into non-like kind assets. So for example, we just did a $7.6 million property in Georgia, and the gentleman has all of the money inside of a real estate deal, and he was going to do a 1031 exchange, but he goes, why do I want to just continue on that path, especially with COVID-19? Let me sell, pay off all my debt, go into the Deferred Sales Trust, and then he put it into hard money lending. And he's been sitting there for a while. And then in the bank too. He actually could have bought at the low, and we told him he could have got stocks, bonds, and mutual funds, but he decided not to because he was concerned with what was going on, and he's kicking himself now. But that being said, moving forward, he's planning to put it with multiple commercial real estate deals, stocks, bonds, mutual funds, some stuff of his own. In other words, he's diversifying versus just selling one like-kind asset and buying one other like-kind asset of equal or greater value. So what do you think, with having that type of opportunity, what would that mean for an investor like that?
So again, it's all about taking that active. So there's also like this component of like active income where, this is part of my business. Some of my investments too, I feel is like operational. Like it's, this is how I make my money. This is active. This is, I might make a little bit, I might make a lot. It's a little more speculative. I'm aggressive. But then it kind of goes into the category of savings, right? And once it goes into that category of savings, I really want to protect it, in a way that's not in that activate. Like it got into that savings category in my life, and now that's what I really want to solidify. There's that operational, do what you got to do. I mean, even the expenses for my business, I'll spend, a lot more money aggressively on things that are going on in my business. But then, we go out to dinner. I'm like, wait, what are we buying here? Or, you know what I mean? Like something stupid, right? But, it's just my mindset is a lot more different when it comes to like operations. And then it goes into that savings category. Like I'm solidifying this gain I had. So that's the importance of it. And that's what I would say for people. Paying off debt is huge. And I think a lot of people going and looking at what happened during this illness realize that, we went from just like things going crazy, stock markets going up, people getting all these raises in this moat that people felt like they had around them that, was largely unstoppable, just being taken out in an instant, just the rug pulled out right from under them. And what a learning experience that was. And on paper, it was like, okay, you should always have a mortgage, invest the difference. But man, certain investments that you think are assets could quickly become liabilities in the wrong environment. So again, that peace of mind of paying something off, you can't calculate that return, that ROI. So, and I'm fine with it. I have some debt and I use it in a way that I feel is appropriate. But being able to quickly pay it off or having a strategy, all these things are going to go towards you having peace of mind, which I think you can't calculate that sort of ROI. But, using it wisely, there's nothing wrong with that, and obviously I do hard money lending. I leverage other people up. So,
it's a place for all of it, right? It's a time to sell, a time to buy. There's a time to be in debt, time to be out of debt, right? A time to be maybe go a little more aggressive on spending, a time to save, right? So that's the point. It's having wisdom and having that mindset. And I like the idea of what you're talking about essentially taking what's active or something that you've built, and it's almost like it's harvest season, right? You've built this for all these years, and now you're going to harvest it. And you're going to retire the debt, right? And you're going to put it maybe more to the savings, right? So there's some emotional thing about that, right? And not just doubling down and losing it all, right? So I think if I'm hearing you right, but it's about retiring the debt, put it into savings, diversifying, and then at another time, perhaps is another time to launch that new thing. But of course, it depends on the season of life you're in. This gentleman, he's a baby boomer, he's older, he's done it for 30 years, and he's just been through too many market cycles to be like, I'm not going to overpay for a 1031 property and have all my eggs in one basket and keep on all that debt. And his biggest thing was like, I can actually retire the debt now. I can be out of the debt and tax deferred. So that being said, any thoughts on that before we move to the next question?
No, not really. I agree with it. It's interesting. Some people come to me and it's like they want to talk about what they do with their money. And, I got to ask them, well, how old are you? Right. If you're 25 and you're going to invest 100% of your $500 paycheck you just got, that's a lot different than someone who's worked for 30 years, who has 30 years worth of time and effort and energy, and what might be $1 million, $500,000, $100,000. It doesn't matter. It's just that how much does that mean to you? Someone who's got a $500 paycheck, and that's everything they have. It's a lot different, right? So I guess you just really have to think about where you are in your life, and also it made me think about how I like to invest in deals. I like to, really make sure that losing money is not going to happen if possible. That's my goal. And so like hard money lending, I really like to make sure I have a certain amount of equity, right? Just basic things where it's like, worst case scenario, you don't make a single payment to me. I take the house, I sell it, and I at least break even, right? That's just, it's like common sense sort of thing. And so that for somebody might be a pretty good way for someone that's older, that has money, that wants to be able to sleep at night, to do. If you work with the proper people, you can do that. It's a great way to invest your money, in my opinion. You can get great returns too, lending money privately.
Yeah, excellent. No, thanks for sharing that. Absolutely. He exactly the reason he did that. So we'll touch on this question, then we'll go into the lightning round. What's the biggest frustration or mistake a client, a friend, or partner has made when it comes to capital gains tax deferral?
I would just say we had a weird situation happen kind of during the 2017 crypto boom. We'd done very well investing in crypto and whatnot. And anyways, there was another deal, trying to scrape the last bit of gains and just to hope that this kept going. But it was towards the end of the bubble. We made another investment. It was about $200,000 we invested in a blockchain startup. There was this idea. We invested in like the pre-IPO round, and the business just never launched. I mean, just after that December into January, that 2018 crash, there was just zero enthusiasm for crypto. So the ability to raise more money, to get things off the ground, to launch what was going to be that business just never happened. And so, it was, honestly, when my tax guy was like, hey, we need to do our taxes in like 2019, I had to go back and look and see, well, when did this investment go worthless? I mean, it was great. I mean, it was money that we put on a little sailboat and it just watched it float out into the ocean, into the middle of nowhere. There was no defining buy. There was a defining buy, but there was no defining sell point where we could capture a defined loss on this. So it was just a matter of investigating, talking with the company and just discussing with them when was the material sale, when was the material loss effectively done. And that was just a complicated thing right there. I mean, you asked me like, what was the most, the difficult thing we deal with? I mean, that was just an obscure thing that happened to me. And it kind of tells the story as to, me investing and losing money in the crypto bubble, trying to make a little bit extra money and losing some money there. But and experiencing that tax issue.
Yeah, that's great. Thanks for sharing that. On the other side of that, I'm curious, how are, friends, family, clients, partners on the gain when they're selling, taking their gains, are they just paying that tax, or what are you guys doing there to try to mitigate that capital gains tax?
Well, everyone deals with their tax person and their accountants. But if they're holding these positions for more than a year, they get the long-term capital gain. If it's short-term, it's the income. So it's not something that we personally advise people on or do.
Got it. Perfect. You ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you would make sure you would do or know?
Oh, I would say have more confidence in myself.
Beautiful. What is the one book you've recommended or gifted the most in the past year?
Think and Grow Rich.
Give me a mobile or digital resource you recommend for your business.
I would read, honestly, I would, sorry, I'm trying to think. I read Zero Hedge regularly. I think it's a great source. And
Beautiful. Favorite leadership quote or theme you try to live by?
The harder I work, the more luck I seem to find. I think it was a Thomas Jefferson quote, roughly.
Beautiful. How do you stay centered after all your success? And this is the last question here. And all of your experience and all of your struggles and achievements. How do you stay centered in your values and encouraged to reach for new goals?
It's a growing experience, something that I struggle with and have had success with, kind of ebbs and flows. But it's a tough thing because, you have to, I'm young, I'm in my early 30s, and it's one of those things where, I've made it in certain ways, but I'm not done living. So I got to keep going, right? I have to, when I was young, I was like, man, I'll do anything. I'll, sweep the floors and whatnot, and I was really aggressive. And now I have a family, I have a business, I have a portfolio to protect. And it's like, things are not as aggressive in a sense because I need to be smart to not lose what I've built up. There's also that aspect. In the early stage, it's you have nothing to lose, but you also had nothing to lose, and you're just willing to do anything. But now it's like you really got to be careful with the things you do, where you allocate your time, where you allocate your resources, and where you put your investments. And that diversified word becomes so much more important as you get older and you build. And so I'm really trying to stay balanced in that. And then also it's a lifestyle, things change, people see you differently. And, and not that I go around bragging or anything like that, but, some of my friends, they know I've made some money in my life, and people change, in a way, the way they perceive you. And there's that old saying, it's kind of lonely at the top. It's lonely at the top because it's hard for people to relate to you. It's hard for a lot of people to relate to you when you make, a good amount of money. And so for me, it's about being relatable to other people, staying humble and being able to connect with other people. Because I think that's a really important thing, because in life, relationships, love, the people around us, those are the things that matter. And obviously, if you're getting to a point where you can't relate to people, you'll be depressed, which will compound and wreck everything you have.
So much wisdom there. And Keneth, I want to thank you for being on the show, for sharing your inspiration, your story, your knowledge. Wow, so much we covered here in the last 35, 40 minutes here. With that being said, I want to encourage you to keep using the gifts and talents you've been given to bless others and make a difference financially for so many folks. But would you remind our listeners one last time where they can find you, and then we'll call it a day?
Thanks, Brett. Appreciate everyone tuning in and listening to me, especially got this far. If you want more of this, feel free to visit me at crushthestreet.com. Thank you so much.
Thanks, everybody, and thanks for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to grow your wealth. Hey, please share, rate, review, and subscribe. And as always, if you have cryptocurrency, a stock, a real estate, a business that you're selling and you're struggling with capital gains tax, contact us today for a free consultation by going to capitalgainstaxsolutions.com. Thanks so much for listening, and we look forward to having you listen to the next show. Thanks so much.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.